Uganda is progressing very fast, negotiating sharp bends at breakneck speed. On the Drift podcast, we put that growth in perspective.
Good evening, Ugandans. Good evening, Ugandan enthusiasts. Wherever it is that you are watching the show from, you are welcome for yet another episode of the Drift podcast, where we get to make sense of the moves of the taxman, and also where we get to understand exactly what the expectations are of us as business people. So if you're into business anywhere in the country, or if you're prospecting to do business, then this episode becomes particularly important for you, because we are going to be digging deep into the animal that is income tax. And of course, with me on set is a regular, a person who is no stranger anymore, and that is none other than the magical Jolly.
Hey, good evening, Solomon, and thank you for having me here again. And good evening to all our viewers that are out there watching the You Are a Drift podcast. And I'm glad to be here to try and break down in simple terms the basics of income tax as it applies under the tax laws of Uganda.
Yes, we are going to dive right into the matter, and of course that will get me to asking you the most important question perhaps this evening. And that question is, when you say income tax, for the context of Uganda, I know it's pretty unique to every country, but for the context of Uganda, what is income tax?
Okay, thank you for that, Solomon. And to put it in the simplest way for our viewers out there, income tax is tax on income. So right from the name of the tax, it's income tax, so it's tax on income. So this tax is paid by everyone who earns income in Uganda, whether you're a resident of Uganda, whether you're a non-resident of Uganda. For as long as you earn income in Uganda, you are subject to pay income tax in Uganda. So there's a couple of names that are used to mean income tax in Uganda.
Please.
So some people will call it payee when it applies to employees.
Pay as you earn is income tax?
Yes, pay as you earn is income tax. It's just that when it applies to employees, it's called payee. Pay as you earn. You pay the tax.
You pay this income tax as you're earning it.
As you earn it. But it's also it's income tax. So some people will call it rental, which of course applies to people who have rental properties, whether it's a commercial building or a residential house that they are renting it out to someone. Okay. So people will call it rental tax, but it is income tax. So other people will say withholding tax. I'm sure people have heard withholding tax over and over again, but withholding tax is income tax. It's just the method within which it is collected that I withhold it when I'm making a payment. So it gets its name withholding, but it is income tax.
So as you're about to get your income,
yes,
someone withholds a bit of it.
Withholds
for tax
the
purposes.
Tax. So because of the way the tax is collected, that it is withheld by the person who is paying it, then that is why it is called withholding tax. But it is income tax. So in some instances, you'll hear people saying capital gains tax. And you wonder, what is capital gains tax? It is income tax. It's just that now at the point when you're selling off an asset, especially a business asset, that is when capital gains tax will come in, but it is income tax. So income tax,
the assumption is that capital has gained. So
yes. So capital has gained value over time, and of course you're paying for that extra income that you're earning from the fact that you bought this thing at, let's say, 10 million shillings, you're selling it to someone at, let's say, 20, 30 million. That gain over the period of time that you've had it is what we are subjecting to tax. So you're getting much more than you actually put into it, and then you pay what is called capital gains tax. So whether you call it capital gains tax, withholding tax, pay as you earn, it's all income tax. It's just the different names people use depending on the circumstances.
Different clauses for the same person.
For the same person, indeed. So that is what we call income tax. You pay it because you have actually earned income in Uganda. So that is what income tax is in a nutshell.
You've really defined it even for my little man. He will be able to appreciate what this thing is. But who pays it? I know it comes in different shapes and sizes, but who pays income tax?
Okay, so income tax is paid by anyone who earns income, like I mentioned earlier. So as long as you earn income in Uganda, you pay income tax. So how do you earn income? Okay, first you earn income by being an employee. you're employed by someone in Uganda and they pay you a salary.
Like you.
Yes, I'm employed by URA. We are both employed by URA. So when URA is paying us our salaries at the end of the month, then they will charge us income tax. We call it pay as you earn, but it is income tax. So you earn income by virtue of the fact that you are employed. And by virtue of the fact that you're employed, you have to pay tax, which is income tax.
Okay.
Secondly, who else pays income tax? People in business. So you're doing business in Uganda, you're earning income in Uganda, whether you are a resident of Uganda.
You have your little business there,
Yes.
salon, Jolly and Daughters.
Yes.
Magnificent salon.
Magnificent salon indeed. So you have any sort of business. It may be a salon, it may be a big factory, it may be a big business like MTN. So for as long as you are carrying on business in Uganda and earning income from that business in Uganda, then you will pay income tax. If you have property in Uganda, you're earning income from that property, then you'll also pay income tax. So property will mean things like shares. You hold shares in a company. People were rushing to buy shares in MTN. So when MTN is paying you some dividend, okay, you've earned from those shares. Those shares are property. So you'll have to pay tax.
Income tax.
So some people say, but I already paid tax on my salary, which I used to buy the shares. But you've gained from the shares. If you didn't gain anything, you wouldn't pay tax. But the fact
You
that
made an
you've gained,
investment.
you made an investment, you've earned income from that investment, then you will pay income tax. It will be now on the property. So you paid on your salary as an employee. You have another stream of income, which is property. You'll also pay income tax on that, the earnings from that property. Then rentals, of course, which is something that is very well known in Uganda. If you have rentals, you're earning income from owning rentals. You'll also pay income tax in form of rental income. So yes, employment, property, you earn income from property, you earn income from business, you earn income from rentals, you'll be subjected to income tax. So who pays? Anyone that earns from those different income streams will pay income tax. If you earn from more than one income stream, then you pay the relevant tax on each of those incomes.
Jolly, what's the case for people who are not necessarily owning rentals,
Okay?
but they have property that they are leasing out to another person?
Yes. So
For-
let's say
for a
you
fee.
you have empty land,
Mhm.
okay? You're licensing it or you're leasing out to someone who's using it and paying you some sort of fee at the end. That is property. So that is property that you own, and definitely you're earning income and you'll pay income tax on that income.
Income tax is still in the picture.
Yes, income tax, for as long as you earn income, tax. You pay tax
Are,
on that.
are there exceptions, or everyone really gets to? Because you make it seem like whoever is earning anything has to actually deal with this monkey that is income
For
tax.
income tax. So yes, there are exceptions. Like every other general rule, there is always an exception. So like we talked about value-added tax and we talked about exceptions where people may not pay value-added tax. Income tax has a few exceptions as well, where people may not pay income tax even much as they're earning income. So let's look at employment, okay?
Okay.
Which people earn employment income and they're not going to pay income tax. So first of all, the government of Uganda, or parliament, because parliament is the one that passes the tax, but parliament is part of government. So believes that every Ugandan needs at least 235,000 in a month to survive. Basic minimum. They need
235K.
in a
How
month
did they come to
survive.
that number?
We shall ask the parliamentarians the next time.
That's
we
not for
meet them.
today.
That's not for today. But because of that belief, anyone that earns less than 235,000 is not going to pay tax. So if you're employed somewhere and the person that employs you is paying you less than 235,000 per month, then you're not going to pay income tax on that particular salary. So we will say you're exempt, but it is government's policy that anyone that earns below 235,000 a month from employment is not going to pay income tax. Who else is exempt when they earn employment income? We'll see people that are in Uganda, but they are in the public service of another government. Okay? So you've been sent to Uganda as a public servant, but you're not Ugandan. You've come as a public servant from another country. They are taxing you in that other country where you've come from, but you are in Uganda. Then you will be exempt. Your salary that you earn will be exempt from tax in Uganda.
Let's make it make sense. Let's suppose I'm
You're
coming
diplomat.
from Tuvalu.
Tuvalu, yes.
There's a country.
Yes, you're coming from
I'm coming from Tuvalu, and I'm here
You're a
to
public servant.
yes with Tuvalu.
Yes.
But I'm representing
sent on a
Tuvalu in Uganda.
Yes, you're presenting Tuvalu in Uganda.
Probably at
You're
the
representing
embassy
Uganda.
of Tuvalu.
Yes.
Do they even have one? I hope they do. Am I the kind of person that you're speaking
Yes,
about in this case?
yes. So you're a foreign person who is in Uganda, you're resident in Uganda, you're earning a salary, but you're earning salary from your employment as a foreign public servant who is doing their duty in Uganda, then your salary will be exempt from tax in Uganda.
Okay.
Then, of course, there's a very controversial one. The
Which one is that?
parliamentarians. Our MPs' salaries are exempt from tax in Uganda because the law says they're exempt.
All of them.
Yes, and they make the laws. So, yes, they're exempt. Salaries of MPs are exempt. So, for as long as an MP earns a salary by virtue of being a member of parliament, then that salary is exempt. So, they will not pay.
Like the
income
whole of it.
tax. Yes, the whole of that 26 million. About that much, I'm not very sure, but it's about that much is exempt from tax. Then there are, of course, the people that protect our country, okay, the people that serve us in different protection of security arms of this country. That is, of course, the UPDF, police force,
Uganda Police.
prison service, and people in ISO, External Security Organization. Those are also exempt from income tax on their salaries. On their salaries. I'm talking about employment income, unemployment income, and you're not paying tax. So if an army man decides to set up a business, that is not exempt.
There URA can come.
URA can come in. But his salary as an army man, his salary as a police officer, his salary as a prison warden is exempt from tax. However, if you're a civilian, you go and become an administrator in prisons, or you're working as a secretary, somewhere in the UPDF, one of the generals, but you're not a military personnel, you're not exempt. So it's only the officers, the commissioned officers, that are exempt on their salaries. So those are the categories of persons whose salaries or employment income is exempt. Oh, plus the DPP, which was added recently.
That actually makes it quite interesting because
DPP persons that work in the office of the Director of Public Prosecutions, their salaries are also exempt. So let's just go through this again. Persons who earn below 235K, they
Okay.
don't pay
tick
tax on their salaries. Foreign officials,
Tovalian.
yes, public servants of foreign government that are working in Uganda, by virtue of their jobs, do not pay tax on their salaries. And then the parliamentarians, and then UPDF,
People in security.
prisons, and the police, and let's add DPP to that lot because they all work together. DPP works with police. So all those, once they earn employment income, it is exempt. So let's leave that category of employment income. Let's go to the category of business income. Which people earn business income, and that business income is exempt
What
or is not paying
constitutes
tax.
business income?
Yes, what constitutes business income? That is a very good question. So business income is basically income that you earn from doing business in Uganda, whatever business you're doing. Whether you're offering goods for sale, whether you're offering a service, whether you're a consultant, because a consultant you're offering a service. For as long as you are in any activity, you're engaged in any activity
That is bringing you
that is
money.
bringing you income and you're making profit, then you are subject to income tax, and you will pay income tax in Uganda. So you have to be in an activity that is business in nature, that earns you income, then you will be subject to income tax on that business income in Uganda. But like I said, now we're looking at the people that are exempt, who will be in business but will not pay tax in Uganda. One, if your turnover in your business, not your profit. People like to confuse these two.
The turnover
your total
of the
sales,
business.
Your total sales in that
For what
particular
period?
business. For that particular year in which we are looking at you for tax purposes. Because remember, tax is paid yearly. Okay? We look at you for tax purposes on a yearly basis. So if in that particular year that we are looking at for tax purposes, you are in business, but your turnover, your sales is below 10 million, then again the government says, okay, your tax rate is 0. So you're not going to pay
That's
tax.
about 840,000 a
Yes,
month.
about 840,000. For you go to do your business every single day, but in a whole month, you have sold things worth 800,000, or you've given services worth 800,000 in a month, and of course, less than 10 million in a year.
Government
then
is saying for
government
you,
will say for you, tax is nil. You're not going to pay tax. Okay? Otherwise, if you're in business and you earn more than that, then you will be subject to tax. Who else will be doing business and will not pay tax? Government also exempted SACCOs. okay, because they want SACCOs to grow, people to be able to access money, because SACCOs help to supplement financial institutions. So government said, SACCOs for now, up to 2027, let them not pay income tax. So
This is 2024?
Yes. So
It's about 3 more years.
Yes. So government said, okay, SACCOs, no, you're not going to pay income tax. Same thing applies to collective investment schemes. Because they want people to get into the culture of investment.
Collective investment schemes.
Yes.
Kazunga
Because-
kanji.
Kazungu kanji. For example, unit trusts. If you've heard of unit trusts,
I've heard of
these are
them.
run by, I think the most popular one is UAP. So those sort of schemes where people invest in a scheme, then those are exempt for now. Government wants people to learn the culture of investment.
Is it still up to 27 or for them
They
it's a
didn't give
different
it a
arrangement
timeline.
altogether?
But there was plans or proposals to remove that exemption last year. But I think government looked at it, parliamentarians probably looked at it and said, no, let's leave that exemption to stand.
Let's
So
let them keep cooking.
yes, so we don't know how long it will last because it wasn't given a timeline like the SACCOs. But for now, they are exempt. Now, then there's this particular category in business that no people are interested in. People like to say, government gives exemptions, but we don't know who gets them. Okay? We hear that they give tax exemptions. But we
Then
don't
there's
know
also this
who
other
gets them.
thinking that it's the Wazungus who get the exemption.
Yes. So there's that belief that for say, it's only foreigners that get these exemptions. So I want us to help break down these exemptions so people understand who gets
Please,
them.
for that particular one, I get to pay extra attention.
Yes. So because these are businesses, okay? So if you are in business and you are an exporter, okay? You export processed, finished goods.
I'm in
Don't
business,
export raw materials.
I'm an exporter,
Yes, you are in business.
and I'm exporting processed finished goods.
Yes.
Like it's done.
It's done. Okay, where you're taking it, they will just consume it. It's not a raw material. So if you are in business, you're processing goods or processing agricultural products, you're manufacturing and processing, and you're manufacturing a finished product. And you export at least 80%. Okay? You must be exporting at least 80% of what you're producing.
80% of what I'm making is going
Going
abroad,
out of the country.
20% is staying in the country.
It's maybe staying in the country, you may even be exporting 90%. You may even be exporting 100%. But at least bare minimum is 80%. Then you can apply and get a 10-year exemption.
They call it a tax holiday.
More like a tax holiday.
10 years.
10-year exemption. So Ugandans out there, if they want to also benefit from these things, all they need to know is they need to be exporters because the government wants to get payments from outside the country to be able to balance your economy.
The dollar.
To be able to do that, you must be selling. Okay? Otherwise, if you keep importing and you're not exporting, then the value addition to your own economy is almost negligible. So because of this, government wants people to produce and export. So if you produce goods, finished goods, because if you're exporting raw materials, then they will go add value to them out there.
And bring them back.
And you buy them expensively. So this is targeted for people who export finished products. At least you must be exporting 80% of your finished product. Then you can apply, you have to apply for it. It's not automatic. You have to apply, of course, to be able to qualify.
You apply
must
to
have-
who?
You apply to the commissioner. Okay, and you must have evidence. Okay, you must show that you're exporting. You must show the detailed processing that the goods go through to the finished product. Then of course you must be compliant. For tax purposes, you must be a compliant taxpayer. Then you can apply to get the 10-year exemption. Then there is another category of people.
Investors out there, this one is very important for you. In case you do check all the boxes according to how Jolly has really broken it down for you, you just need to prepare that paperwork and you make that application to the Commissioner, Domestic Taxes.
Commissioner domestic tax.
Please,
As long as you have evidence.
as long as you have your evidence.
Yeah.
Uganda is progressing very fast. Negotiating sharp bends at breakneck speed. On the Drift Podcast, we put that growth in perspective.
Uganda Revenue Authority, developing Uganda together.